Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Are we live? I think we're live. My OBS isn't showing it, but YouTube is. So I think we're okay. You tell me if we're not live. All right. Oh, Rodrigo says good morning, so I think we are. You see there's new Jigsaw features? I need some music. I'm not sure what you're talking about. I'll go look. Okay, but first the charts. Well, we got some rollovers coming in today. A couple of financial instruments, etc. Also, we should be switching over yes, shouldn't we? Yes. Okay, so but let's go through the volume profile and everything first. So here on ZN, well, there was some pretty crazy upside action yesterday, but that did kind of end up fizzling out. And the overnight action, we've actually had a little bit of bear, but I mean nowhere close to retracing from the Federal Reserve meetings. So here's ES. ES taking a little bit of a hit yesterday, actually, but recovering it pretty well in the overnight. When this moved down, there was some very, very large orders I was seeing on the DOM following that. That was a little weird. Yes, very angry about that. I couldn't find any news or anything like that that could be driving it. Oil kind of going sideways. We did get the rollover here, so gold and silver kind of holding their gains after the Fed meeting. Capper doing okay. China is well, economic activity in China is still kind of rough, but China is doing more to support, so people are optimistic over there. Japanese yen, of course, we've got a rollover, big jump there. And the dollar just getting absolutely pummeled. We are now at 101.5 after being at 104 only a few days ago. What a wild move. And Bitcoin, well, Bitcoin just kind of in the middle between here when Elizabeth Warren said that they're going to regulate it. Okay, so that's where we're at. Ismail, how have you been? Welcome back. There was a Jigsaw video posted an hour ago. 8 new features. Ooh, really? Let's check my mail, because I did not see when I was checking through everything this morning. I didn't see an email about it. University is gotcha. Okay, so did we have some news today that I forgot about? Canadian wholesale sales month over month. New York Fed manufacturing, holy shnikes. Negative 14.5 versus an expected 2. What? Okay. All right, so first thing, we need to roll over here.
As well, we are shortly expecting comments from Feds Williams. Again, he's slated to speak on CNBC anytime from now.
Feds Williams is about to speak to, that could be... Listen, we could still have some... We're actually not could. I think we're likely to have some crazy things happen this morning, okay? Because we've got a ton of gamma coming through. We just had that Empire State number that's a little wild. We have Feds Williams is going to speak. He might kind of shake things up. So keep your seatbelts on, all right? Let's see here. I don't see an email about it, so I'm going to go and... Okay, yeah, they do have a new version. New depth and sales column delta price. Clear current trades every X seconds. Clear current trades outside of momentum
We have
tells.
posted out the
CP&L in ticks.
reports on the feed for anyone interested.
Ignored sim accounts and journalytics will not be visible on the platform. Highlight the opening range on the volume profile column. Ugh. Well, whatever. Day trader chart now working with market replay. Left right text justification option for volume profile, bid asks, current trades and last traded and then minor issues fixed. Not spreads though. Really want to see spreads. I'm just kind of poking around here. You think we should download it? Well, that's very interesting. Did Williams say something there? Because I can't imagine a scenario where that New York number results in selling in the treasuries. I don't. That's.
So Feds Williams says we aren't really talking about cutting rates right now. So again, Feds Williams says we aren't really thinking about cutting rates right
We
now.
aren't really thinking about cutting rates right now, says Feds Williams. We aren't really thinking about cutting rates right now.
So this says that he
Buy
is
that
focused
shit.
on whether the policy rate is in the right place.
So I think I got to be careful with this because this can be one of those ones that like
saying we're not really talking about cutting rates right now.
flips back really quickly. That often happens with Fed speakers, but we are now getting the pushback that everybody has kind of been wondering where it has been all week. I think that in a rational world should remove some of the let's say this should take some of the air out of the rally. Yeah. If we move down appreciably in the treasuries,
I'm
we'll
not
see.
speculating on what will happen on rates.
He says, I'm not speculating what will happen on rates. We aren't really. That is so interesting the way that he said it too. We aren't really talking about cutting rates right now. So Feds Williams walks it back for J Powell. That's what just happened there. Is Williams walked it back for J Powell. We are getting some insane steepening on this. So that's why here in the 10-year, we aren't getting paid too much for it yet, but this move probably has some legs. Wow, oh, wow.
Feds Williams says
It's going to be very interesting to see where the treasuries go from here, man. Because, well, let's see here. Let's just pull our volume profile back up here.
Feds Williams says we are at near the right place in.
We'd still need to get to like 06 half before we're even like starting to retrace the FOMC move.
Says
so
be prepared for unexpected.
I guess maybe that should be some caution. Oh man, I'm very unhappy with the spread right now, but that's okay.
Says the Fed must be ready.
Guess I should have taken it in the 2-year. Should have taken it in the 2-year. But look at the spread there. I'm not gonna mess with that.
Fitzwilliam says market reactions to all news has been quite large.
So the issue with the spread is that we are getting very extreme flattening off of this move. So the 5-year is moved a lot on that move, and the 30-year didn't. Like, look at how far down the 10-year is from the open compared to the 30-year. And so that meant that we saw things move down in the 10-year quite considerably, and I'm only making 10 ticks over here in my micros.
Again, weakness seen in the S&P. It's pairing.
Basically, my position in the micro 10-year is going to make more money when ZB is getting slaughtered.
Talking about rate cuts right now, and that the Fed must be ready to hike again if needed.
Okay, there was a little bit of a shift there, and the 30-year caught up a little bit.
Also noting Treasury yields edge higher as Fitzwilliams comments on rates now.
I totally know what I'm making on TikTok talk today. This was like, you know, they're sitting there at the meeting and they're like, you know, we maybe need to push back on this market pricing here. And Jay Powell's like, yeah, but guys, like, it's Christmas. Can't we just like enjoy this time of year and stuff?
Be back to more normal levels.
And then Williams is like, hold my beer. I got that 06 half in my sights, man. I really want to see if we bust that. If we see the flows shift or accelerate. We are already about 20. Oh, we're already 30,000 contracts short. Wow. But this could be a 50 or 60K. So, and curiously enough, the pace has kind of slowed down a little bit here in the treasuries, but they're still moving down.
Fitzwilliam says market reacting maybe more strongly than forecasts show.
Market reacting probably more strongly than forecasts show. Look at that massive offer at 08 half.
To normalize rates.
Wow. Okay, so there they broke that kind of low from yesterday
Williams there saying
without much effort at all.
About the timing of rate cuts.
Alligator asks a good question. Is this a personal view or the board's view?
So the S&P 500 flat on the session, working its way.
Oh man, and then they go offer at 06, and there's a 3K immediately follows it.
Williams says rate cut issues is not the main question before the Fed.
The market's reaction to all kind of news has had a pattern of being larger than normal. Huge, yeah. Wow, we're making $30 on this now, but they are retracing a little bit here now. I would prefer that they stay below the L6. No? He's still speaking, so I think that there's a possibility of seeing flows both ways from him speaking.
Not market views.
The Fed needs to focus on objectives and not market views. So I think that this makes sense. So that was a pretty good pullback, but it was very, very brief. Wow. Hey, oh, by the way, good morning, Tactical Tenacity. By the way, I've been seeing you here. I've been noticing. I'm really impressed. You've been super diligent. Also, hello, A. Good morning. I've never seen your name before, so welcome to the stream.
Feds Williams says reserves remain abundant.
Feds Williams says the reserves remain abundant.
So U.S. short-term interest rate futures add to losses as New York Fed President Williams.
You know what? You know what?
Timing
Just
are premature. So again, the short-term interest rates adding to losses now.
isn't a bad number
Feds
bad
Williams
for the
says not
dollar?
ready to say when the balance sheet.
Or are you talking about the Fed manufacturing number? Forget about that. Forget about the whatever number it is that you're thinking about. The only thing that matters right now is Feds Williams is on CNBC speaking and walking back Powell's FOMC comments. You know what just crossed my mind? I should have done this with two
Williams says
contracts.
Not ready to say when the balance.
I should have used two contracts. I think it's a little bit too late to be like piling onto it now. But I got that one. I nailed that one. I saw the tweet. I came around. I was like, why is the market not moving enough on this? But I trusted my own interpretation of it and hit it. And even when it was kind of not really going for me, I stuck with it. So, you know, even if all I get from this is 30, that's still a great trade.
Williams adding that overall financial conditions have tightened.
So there does appear to be a bit of a liquidity hole here, even though they're still selling. So I kind of have to consider, do I take the short-term profit here, or do I sit around? Because it might be another 45 minutes to an hour before we get like another really strong push. We're not ready to say whether the balance sheet wind down stops. Overall financial conditions have tightened. Well, yeah, until you guys, until Wednesday. And then they retraced almost all of the tightening. Man, oil is getting creamed here. And silver, biggest loser on the day right now. Silver down 1.25%, actually 1.29%.
U.S. Treasury yields rise after comments from Feds Williams. Thus, the 10-year yield
Team just lost 10 bucks there.
3.96%.
Really more like 15 because it could have gotten 3.972 at one point. And again, I don't like that the spot that they're kind of fiddling around with is 06.5.
Also, the US Treasury 2-year yield extending its rise in the wake of Fed Williams comments. It's last up around 6.3 basis points. S&P futures as well. Their pairing gains last flat as Williams speaks of rate cut timing being premature.
So now the question in my mind is that all they can do? Is that low providing too much support? Or are they going to collect themselves and come back and sell again? There is some big gamma on right now. There's got to be some people out there wanting to protect their profits, right? Sometimes that massive gamma can kind of pin the market, but it can also just create absolutely insane moves. And so far, I would say this is not an absolutely insane move. Now, on the other hand, a key factor here is probably going to be the dollar. So we may just need to wait for the dollar to make another push. Okay, Nick Timoros is pointing out, when asked whether financial conditions are easing in a counterproductive fashion, Williams observes that financial conditions tightened a lot from August to October. Monetary policy is working as intended. But I would point out that, yeah, that was maybe true before Wednesday, but between Wednesday and now, we pretty much erased almost all of that tightening. So now, in terms of rates, I would think that at 4% would be a great target, like a great even number as a target. But I don't know. At the moment, just kind of watching this and everything, I'm kind of concerned that we might not get much more. Well, I need to be patient. It's only been like 5-10 minutes. Yeah. Brannigan Barrett, just in case you believed in Fed credibility, Powell had 2 chances to push back against rate cut talk. Williams comes out 2 days later and says opposite to Powell. The amount of commentary that this is going to generate is just going to be wild. Yesterday, honestly, I was sitting there F5ing because I just couldn't wrap my head around how the Federal Reserve was not pushing back, and it just didn't make sense to me. And the only theory that I had really seen was zero hedge, suggesting that the Federal Reserve is being pressured by Joe Biden. To be honest with you guys, I don't really trust zero hedge on these sorts of things. I feel that zero hedge is really there to kind of undermine people's confidence in the U.S. system to some extent. You notice, for instance, this morning, one of the big stories this week has been that there was an analysis done by the U.S. military to try and figure out how many Russians had actually been killed, and they were estimating that it was some 350,000 people that the Russian military lost, which was 90% of their force from before the war. And, that was going around everywhere. And so lo and behold, Zero Hedge has an article out suggesting that Ukraine lost even more than that. They are straight up act as a Russian propaganda outlet, and they have for years. And I think that everything that they say is kind of would undermine your confidence in the financial system, in the U.S. system, et cetera, et cetera, et cetera. So I don't really trust them on that. And they're there's no proof. I mean, it's a theory. There's no proof. And I'm there's got to be a better explanation than that. But I'm sure that everybody else is just as confused and perplexed as I was. And now, to make things even more interesting, we get Williams comes and walks it back on CNBC on Friday. It's pretty wild. We did get a little bit of downside action, but it's actually just forming a range here between 8 and 10. So maybe a little bit of a liquidity hole here. Okay, so Forex Live says, here's exactly what Williams said with more context. We aren't really talking about rate cuts right now. We're very focused on the question in front of us, which is, as Chair Powell said, the question is, have we gotten monetary policy to a sufficiently restrictive stance to ensure inflation comes back down to 2%? That's the question in front of us, and that's the question we've been thinking about for the past 5 months, and that's the question we will be thinking about for some time. That's the topic of discussion for the committee. The discussion really at the FOMC right now is about, do we have monetary policy at the right place, not speculating about what will happen in the next year. I think that's right. I think that was the message that Powell was trying to get across on Wednesday, and the market interpreted it as he's being dovish. I think that the market misunderstood Powell on Wednesday, and that's why you have Williams coming in and pushing back. Now, the problem with that scenario is this. The market has been pricing that the Federal Reserve is going to cut rates 6 times next year. How do you do that without a recession? So, and at what point does the market sit there and say, maybe this 6 cuts next year don't really make much sense? And it could happen today. If it happened today, it would be spectacular. Trap Zach says Williamson private, and then they have a picture of the dot plot and suggesting that he's actually the most dovish one on the dot plot. That's funny. So we did seem like we were developing a little bit of a range there around like 09. Between like 8 and 10, but we have, at least for the moment, popped our heads out of that range. I would say that the activity in the Treasury has kind of returned back to normal. One thing that I found interesting about that move was it started very slowly. Even though there was a lot of delta, the pace of it wasn't incredibly fast. But there was some very aggressive orders, and there was some really massive offers that came out. Where was it? At 08.5, there was a really massive one. Now, I don't remember ever seeing anything there or an iceberg or anything like that, so I guess I can completely clear the DOM here because I know where the low was of the last swing. Mohammed A. L. Arian. Well, that didn't last long. Once again, Fed officials seem forced to walk back public comments that moved markets in a major way. It remains to be seen whether this will succeed, given the extent to which Wednesday's Powell pivot has unleashed several market technicals. So he must be watching the tape with us, right? Because that's exactly what I'm thinking is like, okay, they walked the comment back. It did cause selling. We have not gone nearly as far as I would have predicted based on that news. I think that the amount of volume that we saw, 30K, sounds reasonable. We are seeing the dollar starting to move back up again here too, by the way. But I would think that we'd be able to get below yesterday's low. But perhaps there are some market technicals that have come in or that are kind of providing support so that all of the people selling don't actually, get what they want. well, let's not say get what they want, but they don't. The selling doesn't make as much progress as the buying did. Some pretty exciting breakthroughs with hypersonic propulsion from GE Aerospace. Off topic, but very cool. Oh, I did not see that, actually. That's interesting. I got this guy on TikTok that he's like an aviation military journalist, and man, he really knows his stuff and is so interesting to listen to. He was talking about he went on a tour of Northrop Grumman yesterday, so like this guy's gets like the inside track and everything. But that's a topic that I would have thought he would be talking about, and I haven't heard him talk about yet. Kind of want things, yeah, do it right there. Kind of want things centered at 08.5 just because that was where large orders showed up when we went through. I'm kind of wondering if that one, because sometimes when I see a big order like that show up, it's kind of like suspicious. Like that often causes it to like flip. But I mean, we went way past that one. And I wonder, and it was still there. Didn't notice what happened to it afterwards. I think that they did pull it eventually after stacking it on. But I wonder if that one wasn't a like, oh yeah, I'm totally willing to sell it if you guys come back and get me.
The effective Fed fund rate is unchanged at 5.33% for December 14th.
Because there has been a decent amount of volume that's traded in this area in particular, like 30,000 contracts at 09. Well, the dollar started to rise, but that one fizzled out.
So the Bank of Italy confirms its 2023 Italian GDP forecast at 0.7%, cutting 2024 to 0.6% from 0.8%, raising 2025 GDP forecast to 1.1% from 1%. Italy also to post average HICP inflation of 6% next year, 6% this year, 1.9% next year, 1.8% in 2025, according to the Italian Central Bank.
I know a little bit further there. Have you seen cumulative delta on the DOM? No. I don't know if seeing it on the DOM would necessarily make sense, to be honest with you. If you want to do it in Jigsaw and you don't want to do it on a chart, then you use like these strength meters, right? And then this allows you to reset it and see what the net balance is over time. And that's kind of like the live DOM way of watching cumulative delta change. Or you can do it with the summary tape is another way. Because the summary tape will show you the net change in buys and sells. Well, what I'm seeing right now still looks to me like a liquidity hole. So I'm really miffed that I didn't get 30. I guess I could have taken 20, but that that little bit right there came back so quickly that I didn't really have chance when it started to happen. So I should have taken it when I first kind of had the thoughts. Now I got to sit through this, and it might just come all the way back on me. I think that this situation is a big enough deal that it's worth going for the swing, waiting through the liquidity hole, waiting for that to heal, and possibly getting a further move when the S&P 500 opens. But I guess we'll see. Let's come over here to Zero Hedge and see if they have Empire Fed manufacturing unexpected crashes into contraction. Whoa, that's this. I have to read this. New rules allow crypto holding companies to report their paper gains, not just losses, which industry observers say could give firms more confidence to buy. Let's not give people the reason to buy. That would be so bad for the economy. Who could have seen this coming? And now Fed speakers start to backtrack on the pivot. It appears the message is not unanimous among the Fed heads, so he is portraying it as a disagreement among members, whereas I think that Powell just didn't deliver the message the way that he wanted. In a comment almost perfectly opposed to that of Fed Chair Powell, New York Fed's John Williams appeared on CNBC and poured cold water on the idea of imminent and ongoing rate cuts. We really aren't talking about rate cuts, Williams said in an interview on CNBC, which is odd given that Powell said rate cuts are clearly a topic of discussion out in the world and also a discussion for us at the meeting today. Williams also noted that it's premature to be thinking about cutting interest rates in March. As Chair Powell said, the question is, have we gotten monetary policy to a sufficiently restrictive stance in order to ensure that inflation comes back to 2%? That's the question in front of us, he said. Additionally, Williams noted that the market may be reacting more strongly than the Fed's forecast suggests, and so the market moved. Stocks dropped, Treasury yields jumped, gold dumped, and the odds of a March rate cut are plunging from 100% at one point to now 60%.
So in 10 minutes time now at 9.
Mutiny or
a.m.
just
Eastern
good
time,
cop,
get the
bad
US
cop
industrial
to
production
cap
month over
the
month.
exuberance?
Forecast 0.3% on the prior, minus 0.6%.
Yeah, so that's a good point, is that some people might interpret this as actually nothing has changed and the Federal Reserve is probably going to reduce rates in March, but they just didn't like the way that the market reacted, and so they're coming in to throw cold water on it.
On the prior.
My interpretation, though, is that the market's reading was not what Powell intended, and that these two comments are not actually in conflict with each other. Is my take. I think the issue with my theory is that still doesn't explain why Powell didn't take the bait when he had the opportunity to push back on dovishness. Man, oh man. Oil got hit pretty hard after that commentary and everything. It bounced back really hard and then come almost all the way back and possibly forming a higher low. So it did something very, very different from the rest of the markets. I mean, it sold around with the rest of the markets, but when it bounced hard compared to everything else. So I wonder what that's about, or if that means anything. The dollar is still kind of struggling here to hold this, right? It's still kind of coming down in this channel, not getting the buy. Man, oh man, this is frustrating. Well, another thing I want to point out first of all, ZB is not actually moving that much back up, but it didn't move that much down to begin with. In ZN, all of the pullback that we've had from what, 03? Well, that's a pretty good pullback. It is. Okay, but all of the pullback that we've had has been basically on no change in delta at all. So it is just falling back into a liquidity hole and not keep pushing back. But you do see volume pushing back in the 5 and the 30, especially in the 5. In fact, the 5 has basically recovered all of it and is back to cumulative delta unchanged. Okay. So I am now kind of noticing that this range that we're having in here, we got a pretty fast drop there and then a pretty fast recovery back up. So it looks like the liquidity conditions are still quite loose, let's say. Even though we've got 2000s up there, they're not going very well. There is that is a massive order at 120 even too, by the way. So where we're stuck at is essentially what's the future order is going to be. And I'm making the bet that there will have to be continued profit taking today because of Williams' comments. But we can draw out a scenario where I'm wrong. It looks like there's a little bit of I mean, even though it was a big sell, of course, there does appear to be a little bit of like differing opinion in the market on this. So it's a more speculative of a trade. It's turning into more speculative of a trade than I like. I think markets are still reacting to fundamental reasons like his speech. It's too illiquid and too volatile to attract scalpers. Looks like we should review. Yeah, it is too illiquid. The resting liquidity is okay, but when you look at how much trades and how relative to the amount of market orders out there, it's not liquid enough, and they're just, it's very slippery. I think the term loose is probably a better description of how the liquidity conditions are
Eastern time
affecting the market, right?
Production month over month.
But I don't know if that terminology will make as much sense to people.
6% with a range of 0.8% to minus 0.1%. Capacity utilization forecast 79.1% on the prior 70.
Well, now this is a little bit of a shift because we are getting some icebergs here.
Forecast 0.5% on the prior minus 0.7%. And industrial production year over year.
But they do take it bid.
0.68%.
They take it bid and then the offer slams it back down. Hello, Lucas. Oh, you missed all the fun, man. I'd say that downtick at the top there was pretty good. But then, look, when they take an offer here at 10.5, they're not getting a strong offer. There you go. I think in order to get the treasuries to do what we want, we're really going to need a bid in the dollar. Yeah, Lucas missed the fun part, and now all we're left with is the frustrating parts, right? Well, that was a better of a sell than we've seen, at least in terms of price movement. Cumulative delta is still not really moving in the 10-year. It did move in the 30-year, though. And that could be also interesting, which is perhaps the flattening that we saw. And by the way, I have to say, the knob spread in particular was flattening quite a bit before the 6:30 news and before Williams came in. So we may see another move where ZB pushes down further than the others and helps us out a little bit. I'm hoping. What happened? The market is dead now. Yeah. So what happened was Feds Williams was on TV on CNBC and basically completely pushed back on and walked back Powell's comments from the FOMC meeting. He basically said, he straight up said, we are not talking about rate cuts right yet. We're not really talking about rate cuts yet, is what he said. So it's basically like, well, we kind of said that we were talking about rate cuts, and the market like read a lot into that and everything, but that's not really accurate. Is kind of the way that I think that it was presented to me. Is he getting fired? So the markets sold pretty heavy on that. It was a slow starter, and the 30-year did not move as much as the others. So I'm kind of in a difficult position with my trade where I could have gotten 30 bucks at one point. It's come back to 20 bucks. I'm a little unhappy about it, but it's not terrible. And we're kind of just languishing in the liquidity hole and waiting to see if after this liquidity hole heals, that if maybe more selling comes through. Because we are 0.6 is essentially yesterday's lows. So we're not even actually retracing the movement from the FOMC meeting yet. But it was a 30K net sell in the 10-year in ZN. So, oh, you missed FOMC? Yeah. FOMC was wild. Okay, so are we getting some more news here? Oh, we do industrial production and capacity utilization. Oh, and then we get US S&P services PMI flash.
Still waiting.
There was a little bit of movement there in the treasury, but I don't think that the news's actual number is hit yet. That is a strong pull for a number that the market usually doesn't care about.
Capacity utilization, 78.
Okay, well, industrial production, spot 2 versus an expected spot 3. Capacity utilization, 78 spot 8 versus 79 spot 1. Output, spot 3 versus spot 5. That I would all say is kind of dovish. Market doesn't seem to be reacting too much to it.
Keep in mind, still waiting on the industrial production year-over-year data. There doesn't seem to be much movement in the markets here, just a little bit of weakness in the dollar.
I was arguing with a candlestick trader, and she was claiming that rollovers have no impact on her.
Just noting some prior revisions here as well. Industrial production.
Oh, man.
Prior was revised down to minus 0.9%.
Let me guess.
6%.
They use trading view.
Prior also revised down to 78.7% from 78.9%.
I probably shouldn't have the news squawk on there like that. I'm sorry. Well, a little bit of a jump off of that news. I'm not going to say that it was a jump because of the news, maybe perhaps more just settling back into the low, but now we're kind of pushing the top of this. I'm still not seeing a change in the cumulative delta in ZN. There was selling in ZB when we had that push down to, like 123.10 in ZB. But the net of the volume in ZF, it continues to be a gentle buy. Although it does seem to be kind of evening out now. She asked why I skipped rollover but couldn't understand. Well, I don't know why. So definitely rollover makes things more difficult and everything. But given what we had going on this week during the rollover, I kind of feel like that your usual issues with rollover wouldn't apply this week, you know? Because really this week it was all about the news. So mad about this, man. This is so frustrating. I think I have to take it. Well, I have nobody to blame but myself for that one. Because one, we had 30,000 contracts sell. So that alone has got to get me thinking maybe I need to take it off here. And it was on my mind, but I just didn't hit it. You know, I always have this propensity to kind of wait and just see what happens, you know? And then when it started coming back, it came back way too quickly. I was not fast enough. So that was all, so I'm not going to say that it was an issue with my thinking and my predicting the flows here so much as it was an issue with my actual execution. But I should have taken profits on that and made 30 bucks on that trade, and I basically scratched it. I'm very unhappy with myself about it. Maybe we get more opportunities later, but I'm kind of thinking that the market is trying to shrug it off. Like, I think the bulls are looking at this and saying, you know what? The sellers actually didn't make that much progress. So if we start pushing them up, we might be able to squeeze them out. Change the title. Williams walks back. Powell. This really is, I'd say, a unique situation. Yeah. Well, getting out at break even was the correct choice here, because I would be very upset with myself if I was losing $5 or $10 on this. No, and the thing is I knew, like I said it. I said, you know, sometimes when it's a comment like this on CNBC, it retraces it significantly. Can even do so quickly. Yeah, I was 100% right. I'm concerned that what will happen is, you know, I still have the opportunity to be long from here, but you know, what if this is where they start to turn down? But I'm not seeing that. What I'm seeing right now is a very strong net buy in the 5-year that's just continuing to push. And that's very bothersome. That I think should have pushed me out of my position a lot earlier. So there was a lot of things that I was seeing, and I just liked that we had caught a good winner, and I do think that you know, we should see continued selling, but I just ignored all of the data that was coming in showing that it wasn't continuing. I wonder also, so last night, the boys did not sleep well again. Like, I got everybody in bed and asleep at a reasonable time. And then about 90 minutes later, they woke back up, like thinking that it was only a nap and then wanted to be out and playing again. And after crying for a couple of hours or whatever, my wife eventually took him downstairs. And I don't know if she got any sleep today, actually. I don't know if she got any sleep. And so when I don't sleep, it definitely will affect how sharp I am in my decision making and how well I'm speaking and my recovery from my workouts and everything else. I don't feel very bad. I haven't been like really stumbling over my words either. So I don't think that the sleep affected my execution here on this, but I guess I do have to consider that as a possibility. On a day where I was sharper, would I just say, okay, $30 is enough and taking it? I think depending on how I was feeling that day, there certainly would be situations where I'd be like, well, you know, especially if I was frustrated and I was just happy to catch a little bit of a winner. But this time I was looking at it like, I should be able to get $50, $60 off of this one. So I guess with that in mind, if it starts to turn aggressively back down, do I need to, like, should I be trying to jump back into it? I'm not so sure now. Because the other issue is we do get a sell comes in. It makes me want to buy at 394 again. And they're only able to get back down to like 09 in the 10-year or something like that. Well, before the E-mini starts, you know, I haven't been doing a good job at inserting ads. So let's insert an ad right here just before the E-mini starts. For you that still have ad blockers on YouTube. Well, no, I don't think we have anything. Oh, you can browse around a little bit here. This is the largest ever options expiration. Really? Oh, there, they just moved another step. You have premium? Well, I have a theory that YouTube actually will tend to send me more viewers if I insert ads every once in a while. Because it doesn't really make much of a difference in terms of the amount of ad revenue that I get from YouTube. It really doesn't. Maybe it'd be a significant thing if there was like 100 viewers watching, but... Okay, 15.5 is a spot that we should keep an eye on. Wow, is ZB's actually almost going to get to the regular session high? Yeah, that's a solid theory. It means they make money. Yeah, because I've just noticed on the days that I do that I was getting more like 35 to 40 viewers instead of 30 to 35 viewers. One of the issues is that because the analytics don't really show me like returning viewers and things like that, I don't know how many of the views, because the numbers are just so incredibly consistent, right? We have about 30 viewers that are just always here every day. And then throughout the stream, the number of views tends to be between 1 and 200. And so I don't know how many of those 1 to 200 are just people coming in, checking to see what I'm saying, making sure that they're not missing anything, and then going on their way, versus people that are like brand new, see the stream and aren't interested in it. No way for me to tell that, right? Okay, some big orders at 15.5, 16. So that would probably be some market makers trying to rebalance. There's no way to see if people are new viewers. Not for the streams, not really, no. And not, well, I think that you can see, like, hold on. Depends on, it also kind of depends on what you can see on certain screens. So like when you go to lives, for instance, you know, it doesn't show you return. I can only see returning viewers when I come back on. Oh, that's not what I wanted. I wanted audience. Returning viewers, right? But it doesn't give you those numbers as a breakdown between like videos and streams and stuff like that. I haven't posted in a while, so, you know, I'd say the views on the channel have slowed down a bit. Oh, I posted something in the comment. Yeah, let's go check that out. Is it this one? I am looking for historical market depth data, either CME futures or equities, looking for the cheapest at the minute. As I figure out the scope for this project, does anyone know of any providers that do this on a cheapish scale? Not on a cheap, definitely not on a cheap scale. Oh man, wow, that turned back down so fast. And the dollar started coming back up. It does. It did, well, was that from the open? It was. Yeah, getting historical market depth data is very difficult to come by. And the only way that I know of is to save it yourself. So I think the play here is we came back to seller's cost basis and bounced off of it. That's the perfect spot to try and go short again. But I really don't like the way the volume has been going through here. I don't like how fast it came back down. And I don't like the timing of it. It's just around the E-mini. The dollar is shifting though. Funny enough though, you know, the 10-year hasn't really changed that much. Look at that. I think there was some people puking in the micros on that one, because that really shot down there off of just like one tick shift. The dollar is, it was moving up, but it didn't trend all the way back up there to the top. It's already moderating again, so. Francesco, we're getting lots of people in here that haven't been around in a while. What's with that? Y'all come because the market has just gotten so wild with Williams and all that? I think that the rest of December might be a little sleepy, but I think that we're going to have fun starting next year. Okay, well, I am seeing a little bit of fight in the tape now. Well, trading wise, I'd say things have been really difficult since October for us. But overall, like life wise and everything, I think things are going pretty well. We just happen to be in a market that has a lot of uncertainty behind it, and that I'm not really understanding what's going on, or, like the thing that wilds me out is what happened on Wednesday with the Federal Reserve was so unexpected and doesn't really make a whole lot of sense. And yet it seems to me that the market predicted it correctly, like that people were placing the bets and the events went in line with the trend, despite all of the other data points we'd gotten out that earlier that looked strong, Beard is going great. Well, I try and let it be a little bit longer in the winter. And this time around, I've been using like a beard balm and got a good brush and everything to make sure that it doesn't look too scraggly. But I'm not going to let it get too long, though. I kind of like that there's a lot of gray in it, but I don't know, maybe I eventually change that. Okay, so news squawk reminding us that we do get S&P PMIs here in about 10 minutes. That's not like a huge mover, but I don't think that it's one that I necessarily want to hold through. Okay, now I get the email from Peter that we've got new features. Oh, delta price column is like cumulative delta on the DOM. Yes, interesting. On a day like this one, every news is a big mover. Yeah, except for that, I don't really feel that the Williams news moved us really that far. Like, we've moved further in the last 2 weeks on people sneezing, There was some pushback. There is some pushback here. In fact, now I am starting to see the 5 years sell again. There was definitely selling in the 30-year as well. Actually crossed the curve on that last tick. There was pretty sizable change in the cumulative delta there all of a sudden. E-minis actually relatively tight here on the open. I mean, they sold pretty hard at the beginning, but now they're getting kind of tight. And the dollar maybe making another push towards buying. So I'm thinking about Powell and my whole theory that I think that Powell just is not the super great communicator with the market sometimes. And I think the disconnect is he doesn't watch the market. Like, he definitely never pulls up a DOM and watches the treasuries and things like that. I think something he could do that would be really beneficial is to watch a recording. Like, to watch our stream and see how the market was reacting live to his comments so that he gets some idea about how the market actually thinks about these things. Okay, there's a pretty big iceberg there at 14.5. Okay, and we're able to get through it. I don't like that 14.5 kind of suggesting to me that market makers don't want to put liquidity up here. What we just got is kind of a clue that they don't want to do a whole lot here. Of course, if the dollar decides to move, it will push us. Alligator says maybe a descent, but I'm not sure the market is taking a side. So he could be right. It could just be a rebalance. Dollar slipping back down there and the treasury's pushing a little bit higher. Liquidity here still looks a little suspect. But I'm starting to get concerned that maybe a wave of buying continues and that they actually try and squeeze the treasuries to the highs. Because they're not really backing off at that 16. Right? The liquidity here at 16 is better. Fairly gentle downtick there, but did go across the board. Which is to say all three of the instruments moved down at the same time. And the dollar kind of reverting back to the middle of its range there. We've still got 2 minutes, so with the PMIs, they might. Oh, why are we doing that? So that's interesting. Some of these offers in the micros are pulling for some reason. So they're like really making you pay up if you want to go long micros, which is weird. All right, so there's the pull for the PMIs. I definitely don't want to be in this now at this with the way this has been going, so. I think we had a few things going for us in that trade, but just kind of luck the draw didn't really quite work out because it wasn't too much movement, right? Yeah, okay, so they were expecting so composite was higher than anticipated, 51 versus 50 spot 5. Look at the micros, man. The liquidity in the micros is terrible. Wow, Windows is screwed up there. It's showing me the jigsaw icon for a chart that is clearly a Ninja Trader chart. Okay. I thought so. So, just to analyze that news that we got there, services was better than expected, 51 spot 3 versus 50 spot 7, and was an expansion again. But manufacturing was lower than expected, 48 spot 2 versus 49 spot 5. And the result that you got was the composite was slightly better than expected. So services has been where the inflation has been coming from for a long time, and you can still see that it is a problem. Damn. Missed a good spot there. Three. When it was like at 20 or 15, there was like a little pause and I could have gotten in there and it didn't. Like I put an order in and white waited to see how the market reacted to it, right? Then the spread came in. And when the spread came in, I could have hit it and I didn't. I need to reset this because this is actually slipping around a lot and I'm having a hard time keeping track of it. Seems that the dollar is all over the place at the moment. But this one right here, it's already 10 ticks against me, so I really don't like that. And that's only been a minute. Maybe a little bit of pushback right there. Okay, well, volume still looks pretty shifty, so I don't know if I can make any too big conclusions here, but surely what my entry wasn't very good. I think that news that we just got, even though it's not necessarily like an A-list piece of data and everything, I do think that it is slightly hawkish, which is to say the composite was stronger than expected and is in expansion, and so that should continue to give the Federal Reserve concern that they can't really reduce interest rates. But the price doesn't seem to be going with that. But the price is just kind of sloshing around in the middle of a hole. I think I really misjudged the positioning there. I need to try and see the edges of this better. You can kind of see how like frustrating this is, that like, okay, we got a big piece of news, we got Feds Williams, we got tons of selling, and like we hardly made anything, and then it comes back up and it seems like it goes further on the way up. And I think that is because the spread worked against us. So yeah, I'm feeling pretty discouraged now. There's definitely, yeah, that's a good observation, Amir, that yeah, the treasuries came back, but the equities seem to be pressured. But I kind of wonder like how much of what's going on is related to the gamma, and that, you know, these guys that have big positions on into the gamma expiration are just hanging on for dear life, and that the sellers just did not push far enough for them to get shoved out of their positions. Volume in ZN is still kind of flattening out. And the dollar, it just looks random to me. One of the big questions, open questions I still have about how I should trade is like, now, how long can I go without seeing the flow that I want before I want to get out of it? It's been about 5 minutes. That decline back to 15 is probably about the best that we've had, but it still doesn't help me too much, does it? Very, very light liquidity through 15, half, and 16. And there it's the other way too. Very light liquidity through 15, half, and 16. They just slide right through it. Can't make anything out of this. Yeah. Well, I think that that's because nothing has really happened yet, right? Well, something happened there when they got shoved because now there's some really big orders at 15, half, and 16. I mean, we'll see if those orders stay there if the buyers come back through. I mean, the issue that you still have is like 5,000 contracts could come through just like that. But that sell was a good thing for us. Okay, there's the 5-year trying to drag things down, but not having too much success. The 30-year actually went down 2 ticks, so we actually steepened by a tick. And in fact, I'm still seeing a little bit of selling there at 123.25 half. Or not 25 half, just 25. Markets are weird. It's been like this since FOMC. Well, I think that the treasury market has been like this for probably the last 2 weeks. It was like this a lot last week too. I'd say today though is much more extreme. Oh, the flow in equities is weird. Okay, yeah, like so yesterday when the ES was selling off kind of a little bit later in the day, I was seeing these massive orders pop on top of it. So there's been like some really big program trading going on over in the ES contracts. And that's probably why it seems snappy, but you're wrong. But I would still say the action today is not like what the action was yesterday, for sure. like today we've got this like the largest gamma expiration ever, and it is definitely having an impact on the way this market is trading. Okay, well, it looks like they slipped through 15.5, 16 again. Weren't able to extend from there yet, but was a little bit of an iceberg at 15.5, and I think that kind of makes me a little bit less hopeful about the amount of selling that we saw there continuing, because it looks like they're going to come back up to the top of that range. It kind of seems to me that the sellers don't have a whole lot going for them. For us, because I sold it. I bought yields. That last one, it was actually a decent amount of buying in ZN2 and in ZB. Yeah, because the dollar is just not finding another bid. Here is what's going on. So I wonder if another way of looking at this is just, okay, this is a move in the dollar. Does Williams walking back Powell's comments actually make the dollar stronger? Well, it does suggest that maybe rates will be stronger, but I don't know if it really gives people's confidence in monetary policy. So maybe that limits the upside in the dollar. Some stops right there. But it did not hold that. One of the things, oh, that's interesting. Now the liquidity on the inside is kind of coming up. I just get to this point where it's like, yeah, maybe I'm right, but I just hate being in a position now, and I don't want to deal with it anymore. I don't know the video you're talking about, Lucas. I was talking earlier about how there seems to be this propaganda war going on about whether Russia or Ukraine is losing more people. Is a good... Listen, the answer to that question is always yes. The best time to invest is yesterday, and the second best time to invest is today. If you're investing, which means you're going to buy and hold, then time in the market beats out trying to find the best position. Does. Wow, someone walked into a meeting and dropped 2 grenades. What the fetch? This little bit of a move up and kind of like stop out is actually a little bit weird, because I am starting to see the 5-year sell a little bit more. And the dollar actually is coming back up there, so... The thing that's going through my head right now is, fuck, yeah. I had a $30 winner, and I was really frustrated that it came all the way back on me, right? And now I'm like, oh look, this is going to turn into a $30 losing day, and how does that happen to me? Because it seemed like it was so hard I got such a good winner, but it should have gone so much further. So And I'm so frustrated with the market right now. You know, I totally had it right on that first trade. These second two, maybe they're just luck of the draw, but clearly the market doesn't actually is gonna fight the Williams thing. That's what's straight up going on right now, right? As they said, oh, okay, we're gonna buy the dip then, because we don't care what Williams says. There was definitely some people in Xi'an being stopped out on that last little tick up. I'm fighting over a tick here, and I'm probably going to lose 5 from it. And there it is again. Although that time they ran into an iceberg, so... Motherfucker. Well, I'm done for the day. What broker would you recommend for NT? Well, basically the only broker you can use with NT is NinjaTrader brokerage, right? If you want to trade Forex, which I don't know why you do, but just trade the FX futures on the CME instead of trading actual Forex. Yeah, guys, I don't know how I got myself into this position. I think that after that first one, well, definitely because I lost 2 times in a row here now, though. I really should have, you know, when I was Blah. Did you see how when you lose, it like affects your whole brain functioning and shit? Okay, when that thing came back to break even, I should have just said, I guess it didn't work out, I'm done. I took 2 more trades, and now I think that those 2 trades went into tilt very quickly. This is what I think happened there to me. But it's just not going my way. The flow is not doing what I want it to. The ZN actually saw some pretty strong volume come in through there. I do think there are some guys getting stopped out. I could probably flip the other way. Sometimes you have a really good reason for the flows to go your way, and it just doesn't actually happen. I don't think I'm going to do anything because I just feel tilted. One of the ways that I know I feel tilted is like you'll start to feel it in your face. Right? It's like your face feels tired and well, so looking back on these 2 trades though, I don't even think that that's even has anything to do with it. Like Jesus. It's just I'm a little embarrassed. I'm sorry. my first trade, I got 37 ticks favorable excursion. But like, look at this. This is why I'm so fucking frustrated. I mean, sorry, I need to not swear when I'm mad, but I was in this for 45 minutes and I had to scratch it. And I got almost 40 ticks favorable excursion, but I thought that it was going to go 50, 60 ticks, right? Then here on these ones, I only had to be in them like 10 minutes before they were going more than 15 ticks away from me. I mean, this one I hung on for a little bit longer, but it was still 15 ticks. I was down 15 ticks well within 5 minutes of being in the trade. And I never really actually got favorable excursion. This one, there was a point where I thought it was good, but the spread was too wide there, and so it doesn't show me as having favorable excursion. They were both just terrible trades. Now, yeah, well, I mean, at the time, I don't think that I was necessarily seeing things that told me like, oh, this is a stupid trade, but I predicted the flows wrong. I just completely predicted the flows wrong. I thought that we would need to see more come in, and what actually happened instead was me and all of the other guys that went short off of Williams' comments got trapped and are getting squeezed higher. That's what happened. Yeah, because this amount of cumulative delta that we've had, well, it's about 20,000 contracts long. So with the way that it's going, I don't think that these are like new positions. They're probably people covering. Even just seeing it down back 2 ticks again makes me want to go short, but I really don't see the theory working now, you know? I got 50 minutes. There may have been a stop out there because they did kind of get a flurry of volume and it's kind of stopped, so. I think I've been having a hard time in this market just because there's something going on under the surface and I just haven't been in alignment with it, right? Like, there's some real forces out there along the treasuries. And something I've noticed will happen is when you get a group of players that are really in control of the market, they can just shrug off market news that's extremely bad for them. Right? Because that's what happened here. You got just about the worst thing that could possibly have happened to all of the longs, and they just held on and it retraced and they're fine. So it was a rare occasion. Well, it's not that. It's I'm trying to figure out what sort of informational content I might be missing. So this kind of brings me back to this thing, which is what happened this week. 2 weeks ago, Powell said, we're not thinking about cutting interest rates. 2 weeks go by. In that 2 weeks, almost every piece of economic data that we got was hotter than expected. And then at the press conference, he says, actually, we are thinking about cutting rates. So he does a complete 180 on himself in the course of 2 weeks when all of the data was actually more hawkish. And this is kind of where I'm coming back to, like, well, I think the market's maybe misconstruing his statements and all of that sort of stuff, right? But the thing that I can't square away is that the market has been buying through this whole thing, right? There was buying a long time ago. Since the beginning of November, essentially, right? And during this whole 2 week period, when I kind of thought, okay, the CTAs are all long and everything, now we get a period where the news is going to be the most important factor to the markets. And we did get really big moves on all of those pieces of data, but in the end, the market basically ignored them. The market continued to buy. And so the question is, what is the market seeing that's giving them the confidence to buy when basically everything was, like the only way that I could possibly see any money manager wanting to buy that would be if they knew that Powell was going to do that, if they had some sort of inside track. So I just can't figure out. There's got to be some piece of information. But then the other thing is what would be the piece of information that would tell you that the treasuries are still that you want to be buy, right? Well, the only thing that I can possibly think of that would let you want to make that kind of a decision is if you knew that a recession was coming. And do any of us think that a recession is coming? I don't think so. I suppose it could be just more CTA momentum, but I don't know. I think that just like the standard CTAs that are in the market, I don't think that one makes sense. But there could be a bunch of other people coming into the market and buying treasuries just because they see the yields as very, very attractive now. Well, there'll always be better informed traders. But the issue here is that we're not seeing the information, right? As far as we can tell, just with the information that we have right now. Because sometimes, there's informed traders, and then later on you find out what it was that they knew. That they knew that it was going to turn out that way, right? But from the information that we have right now, it kind of suggests that it was all just CTAs buying the momentum. And that none of the movement in the treasuries over the past month has had anything to do with fundamentals. Jiwi says a recession is impossible. I wouldn't say that. I think that you could slip into a recession in the first quarter very quickly. Like it could happen so much faster than you would pot. You would be so shocked at how quickly it happens. Well, yeah, but if we slipped into a recession in the first quarter of next year, I guarantee it would stay like that through the summer. Did your message get deleted? Maybe you tried putting a link in or something? Because the only thing I see is worth the 85, in my opinion. I don't know what you're talking about. So there must have been a comment before that we never saw. It's totally, trust me, definitely possible. Oh, the premium version of Zero Hedge? Yeah. I do want to do that. I don't think I'm quite ready to do it. I don't know. To be honest with you guys, I'm starting to feel a little bit aimless. Like, I've been out of sync with this treasury market for so long. I'm getting extremely frustrated because, you know, it's normal for me to be off on something, and then, you know, we get a little bit more information. I see where I was wrong, and we're back on track. But now it's like turning into like 2 months of being off. And for the YouTube channel, you know, I've kind of made the videos that I really wanted to make. The ones that I'm doing, not that I don't have ideas for videos, but they're not the ones that were like, okay, this is what I can teach and this is going to change everybody and all that stuff. Now it's like entertainment content. Let's make a video about it, the chair. Let's make a video about building the PC, that sort of shit. So, I want to be progressing in some way, and I'm not really seeing where I need to aim the moment to get better here. But for now, I think the only thing we can do is sit and watch and see how high does the treasuries eventually get today. And maybe it is gamma, and on Monday, things are very different. But you know what? I think the biggest mistake that I made today was not using 2 contracts when I got that initial long on rates. Because that would have been $60, and then I would have really been happy about it, right? I guess I was a little bit unsure when I took it because the market didn't seem to be reacting to it the way that I thought it should be, but yeah, if they cut rates, inflation will return. I don't see how, well, okay, so here's the thing. We're supposed to get economic weakness in the first quarter. Like, that's the thing. You're not seeing it in the data right now. You're just not. But, you know, their projections are that the economy will be weak. That if you were to look at GDP for that 1 month, you know, it might be negative. In fact, the first quarter GDP may be negative. It might not be like super negative, but it may actually be negative. That's kind of what's being anticipated, right? But the market seems to be saying that if the Federal Reserve doesn't start very aggressively reducing interest rates right now, that it will cause a recession. Right? No, we're not a support group, and I don't need the support. What I need is I need to figure out where I'm out of kilter with the market, right? What if you switched for looking? Then we would just have more random action. I don't think anything would be different. It's just that, like, the good times that we did have for like 9 months there, you just wouldn't have that, you know. The switch that I could make, and I don't know what we would do with the stream here, but the switch that I could make is to just turning all of my trades into a momentum CTA strategy. Please. No, but that makes no sense. I understand what I'm seeing. Don't understand why the flows are coming in through that. And even if I was only paying attention to the technicals, we still wouldn't understand why it's doing what it's doing. It wouldn't help at all. I mean, if there was an actual, real, measurable technical edge that we could get from this, but I really don't. I gave up on looking for that a long time ago. The market is too efficient. Not only that, but I'm not sure with the stream and everything that I can make that work. Like, if I was really gonna find a strong technical edge, I could not trade it on stream. Because as soon as I start showing something on stream, you guys start trading it and it disappears. And I've had that happen to me too many times. That's nonsense. Like, here's the issue. You still believe that you can just watch what everybody else is doing and make money by reacting to what everyone else is doing. And I'm just telling you, man, I've plowed through so much data. I've tried so many different things, and literally machine learning, we're talking about millions of different ways of doing this. That doesn't work. The technical edge that market makers and people in the 2000s and stuff were taking advantage of was not that. It was basically arbitrage. It's basically arbitrage. Are you fast enough? You're not fast enough to get arbitrage. Start a secret stream. Even if it was a secret stream, I think that anybody watching it kind of limits the amount of edge that I can pull out from technical vectors. But like, look, it wasn't today. The problem wasn't that. It's so obviously there's a whole range of different theories that we have about why it's doing what it's doing, right? I'm not so concerned about this one today because I do think that those last two, like the first trade was kind of like an unfortunate circumstance that it happened that way. The second two trades, I probably shouldn't have been taking them, and I think that it may have something to do with me having been tired yesterday. Or tired today because didn't sleep very well last night. That's what I mean. But what I'm more concerned about is trying to make sense of everything that's happened in the last 2 weeks. And maybe we just can't make sense of it and we have to wait until, January data. But I think after that, I'm unlikely to take any trades the rest of this year. That probably draws me down to more than I want this month. In fact, where's our count to? Yeah, 600. That's a drawdown of $50 this month. So that's more than I want to lose this month. But I'm still pissed. I'm still pissed because of this. I don't understand. No, honestly, I don't understand how anybody can come on this stream, look at all of the empirical evidence that we have, look at all of the different back tests and all of this other shit that we've done, and still think that there's some way to watch what everybody else is doing and just react to that and make money. It just absolutely boggles my mind that people would still believe that. Because every piece of like measurable empirical evidence tells us that that doesn't work. And like we understand why the market is the way that it is and why that causes that sort of thing to not work. And so it kind of pisses me off that you would suggest doing that. But it's not just technical inefficiencies, right? Because you're not suggesting an arbitrage trade, right? If you were suggesting an arbitrage trade, it would be different. I don't know how you're going to find an arbitrage trade in the treasuries, but if you're, you know, if there was one like that we could do, then sure, right? But you said, at least you can make sense of what happens right now instead of being left in the dark, not knowing what happened or what is going on. You're kind of suggesting that I'm just going to watch the market and react to what that's doing and make money. That current market price movements somehow predict the future. And I think the whole thing here that people need to understand is there's a theory that past price patterns can potentially predict the future. And we've kind of done, you know, people over the last 100 years have done a lot of research on this fact. And their conclusion is that basically, no, it doesn't work that way. It's not like it wasn't possible that it could have happened, but that's just, it doesn't work that way. Turns out that trying to do that is just as useless as trying to read the future by throwing chicken bones on the ground. Why is that? Well, because the market reacts very strongly to new orders. So any kind of, you know, pattern that you do find, it gets removed by the people trading it. That's why it behaves the way that it does. Because markets are inelastic, and everybody's looking for those inefficiencies. So that's simple. You know, I mean, there's two kinds of, I mean, there's kind of two approaches to this, though. You got to understand, right? One approach is knowing when something is mispriced relative to its correlated assets and arbitraging out a tick or two here because of that, versus the idea that you can accurately predict what's going to happen just by watching the market overall. Right. Insiders know what's going to happen, so you just need to see what they're doing in the charts and then front run it. It's ridiculous. By the time you see it on the chart, it's too late. The chance to make the money is already gone. You can see that very clearly on this move up, right? When we were back here, okay, cool, we had 30K sell. Now it's flat. Why not another sell? Another meta order sell. Totally possible, okay? Moved up a little bit. Now what? Okay, it's a little bit. It's a little bit of a rise, but not a huge deal. Maybe the market is just kind of like not doing anything. They rebalanced, so maybe we come back down, right? It's not until you watch all of this that now you can clearly see, actually, there's a meta order long contradicting the Fed's Williams news. Right? So by the time you can conclusively say that it's happening, which is maybe like right here, right? Yeah. It's too late. Wouldn't be surprised if you wait for another 30 minutes, hour that we're actually back right here. Then you definitely didn't make anything from it, right? So down here, if you're talking about sorry, CC Bun, if wait, are you a previous viewer that just changed their name? I digress. There was something going on down here And I actually thought about taking my first trade off right here. The issue is, and this is what's so darn frustrating about this, man, was that we basically got in, well, let's try and be exact about it. I opened this trade at 633. Okay. So I took the trade essentially right here. Okay. This right here was 30 ticks in the micro 10-year. And this from here to here was more like 20 ticks. So basically what happened was, because of the way that the spread went and everything else like that, I did not get very good excursion on my win, and I got way more pullback on the pullback. So my instrument moved more on the pullback than the 10-year did. So it just worked against me in the wrong way to lead to a situation where I wasn't able to make very much from it. My only option in that situation would have been go short the 2-year. If I'd gone short the 2-year, I probably would have made the $50. Although I would have had to have paid for the spread, and I don't know, that might have canceled it out, right? Ugh, frustrating. And then I got out from this one, right? And then from here to here and here to here was also 30 ticks. What the fuck? Right? It's just... yeah, that's what happened. That's what happened. But I digress. What was the point I was trying to make? I'm becoming ADHD. The point that I was trying to make is that you can't really see that the meta order is there until it's too late. And there's not really a whole lot of money to make from it. Now this stuff right here may have been stop outs too. That's another thing. So seen black sounds, Christmas? No. Anyways, I'm just back to you know, you did feel when we were at the lows in November that the market was oversold and everything. The way that it turned around and everything is a little wild. I'm just not in line with this market anymore. And especially these last 2 weeks. So what do? Well, one thing is we can just wait another month, and you know, maybe a month from now or 6 months from now, we will shift into a market that's more favorable for me. But that's awfully difficult, right? On the other hand, we could start spending our time on something different. Like I could, I'll still have this stuff up here, but I won't really be taking any live trades, and I'll be spending all of my time trying to program some things and build like a momentum system or something like that. I am kind of interested to, I've done a little bit of stuff with like rock volatility and stuff, but that was like all intraday. And I kind of look at this now and wonder, oh, what if I had traded it on a daily? Because this seems to be better than what the moving averages are showing. Although, maybe not there. I don't think that I would be able to make it work with just one instrument. Kind of my question is, okay, so we know the way the momentum works is like you buy the instruments that are up the most and you sell the instruments that are down the most. But can you just looking at one instrument and the amount that it has moved and yada, 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 make pretty good long-term swing trades just based on trying to predict what the CTAs are going to do. And I would like to do more of that, because if I do that, you know, I can swing it with these micro contracts and everything, and I can turn that into a fund, you know? So that is maybe a more productive use of our time, because I kind of feel like there's not a lot more we can do on the short-term basis. It may just be the case that I understand everything that is possible for me to understand, and that I personally am not able to get enough of a combination of, you know, being on the ball all the time and being informed enough to make it work. At least not consistently enough to be for my tastes, let's say. Because that's the problem, is like, I can continue to do this, and I think that there's a really good chance, actually, that we'll have a really good January. I think I'll probably recover those losses and everything in January, because January, February tends to be really good trading for me. But I wouldn't necessarily feel like I'm progressing, and that's where I'm starting to feel dissatisfied. They usually jump to conclusions after every losing session. Well, but it's just the thing that's been bothering me for a long time, though. So, like, another way of looking at it is the stream itself. I think that we have a really amazing audience. We've built something really amazing, and there's definitely edge, some helpful things to watching this stream. Okay. But it's, you know, basically the same group of you guys here every day. And I think the reality is that you guys don't need me anymore. I think I've taught you the most important thing. And if you take that stuff that we have and you just go and you use it, you know, that's the best that we can ask for. And you might have some other things that have enough to put you over the top, right? I don't know how much more at the time I can give you guys. So if it's like, what can I do to make a video that would push the channel forward? Well, before there was all of this content that we had kind of figured out and that we hadn't actually made like real videos about. So we had that to make. But now that we've done that, what can we do to progress the channel further? Unless there's some new study or thing that we come to that we find really, really useful that we can make content about, the only way that we can push the channel forward, in my opinion, is by, you know, continuing to make the channel better and bigger. I don't feel like I have a lot of time right now to really make a whole lot of content. And I also feel that the kind of content that would make the channel more popular is kind of vapid stuff I don't know if I really want to make. I do want to make a video about the chair. I think that that's useful. But there's a lot of other stuff that, you know, is like your typical YouTube videos. I just hate that that's what YouTube pushes to people. And I don't know if I really want to be a part of that, you know? And I've been like struggling with this idea probably for 6 months now. Like, it kind of happened when I made the last of those videos, and then, you know, the ones that I made in the interim were like about you pushing it back against like price action and all this other nonsense. those videos didn't do very well. You know? I also think another problem is coming in and just doing the exact same thing every day is not really me. Like, I have to have something different going on all the time. And lately haven't been able to find those kinds of things that keep me going. And I think that the amount of time that I spend watching the flow and managing a position is maybe holding me back in other areas, and that it's time to start spending more focus on those other areas. So I've been thinking about that for a long time. The only reason why I'm talking about it today is because that's been going on this whole time, and then we get into this situation where I'm just off kilter with the market so bad. And then when I totally have the right thing, it doesn't help me. That's really frustrating. Yeah, of course you don't. You don't actually believe it. That's why it pisses me off, to be honest with you. Oh, I don't think I'm gonna kill the stream. But I might just be doing slightly different things on the stream. I might spend more time trying to glean some sort of a CTA edge. We got 15 minutes left. Trying to think about what these ones were that I did. Oh, do I not have? Oh, that's not right. I have to go to the archive. And custom strategies. Yeah, I remember what that one was. Fourier might be worth looking at. TSI. I don't remember what that is. What is TSI? I do believe you when you say, but I'm also saying that there's a limit to the kind of technical efficiencies that you can find. Right? Like I'm saying, detecting a large meta order and front running the large meta order, that's, you kind of have to use informational inefficiency to do that, I think. Doing arbitrage, that's kind of like a different thing from what most people think of as technical analysis. Like it's really not look at a pattern and then decide what it's going to do from looking at the pattern, right? All you're doing in that case is comparing two instruments against each other, or multiple instruments against each other, right? I think that exploiting the informational inefficiencies is very difficult. Not because you can't find them and trade them, but because there's too much randomness in how they will come out. That's really inconsistent, and that makes it a difficult one to. So it's just like with the market that we've been in, right? Like, I might understand what's going on, but if I'm not able to predict correctly what the flows are off of that, how do you get back in line to where you can predict the flows correctly, right? So basically, like, there's maybe, if you have a good trade, there's maybe a 50% chance that it works. If it works, you should make a lot more than you lose. But if it doesn't work, then it seems like then the chances of you catching, interpreting the next one correctly are reduced, right? So there's this question of, how do I keep myself in line with the market well enough over and over again? Well, one answer could be slightly better information. Like if we paid for the zero hedge elite, whatever they call it, thing where I get more frequent and better data, especially on the treasuries, from the flow analysts to help me predict which way things are going. Like that could make a difference, for instance, right? And so anyways, oh yes, true strength index is a momentum oscillator based on overbought, oversold levels, crossovers, and divergence. See, I think I called that Momo back when I didn't really understand what a momentum strategy actually was. It's also a very complicated calculation. Is based on EMAs. CDI is, I think, the nice one that's like the order flow one that I would like to build everything out and then kind of use that as the base for the Flowbot. These are the ones that we kind of thought were. There's the one that was Delta CTI. I don't know what that one's about. Linear deviation might be one worth looking at. What I'm doing is I'm trying to find the ones that I thought that I'm thinking might be useful in determining what's going on with oh, maybe it's this one. I'm trying to find ones that would be useful for on a daily basis, right? Like everything that I've looked at has basically been on intraday timeframes, and I'm wondering, okay, what if I go outside of that? Because then you get into momentum, and is there some things that on momentum from daily basis we can kind of sort out? What's this one? Rock WB. That seems right. So for what is Rock WB? The other thing is, I guess another thing we got to talk about, I guess another reason why I'm talking about this is that, like, probably not going to take a trade for the rest of the year. So I do need to be doing some research and stuff, right? Overbought or oversold rate of change with bands. So then what's this one? It's a bunch of different rocks. Oh, okay. I understand now. I remember now. So I have IR rock volatility when actually what I want is this one. And maybe this one. But I don't want to trade this based on, they're trying to do it bands to say, when is it overbought or oversold based on the rate of change? And what I want to do is I just want to do it by, is it going up or is it going down? Because you could just look at it as like, what are we, how far are we up or down on the week, essentially? Because that's what you'd want to do for like a CTA strategy. So you want to say, okay, which one of these, for every instrument, what was the net change? And then which one was the highest and which one was the lowest, and those are the ones that you get into. Sure, on these ones. Also, still got 5 minutes. I'm still mad at myself for a bunch of reasons. I think the thing that I come back to on here is like, okay, there's like only so much that I could have done on certain things in terms of like understanding this market and predicting it correctly. But then my execution was just all wrong. I screwed the execution up completely. Like, I'm surprised that there weren't people in chat saying, like, why are you doing this? Why are you doing this? Trying to talk me out of it. Well, that's not right. On R squared, you would think that this should be... Well, I guess it does get there, but it's only for a few days where it's like that, so... But that may just be like... Okay, 8 period. Maybe we need to do more like 58 period, and then... Yeah. Now you get it a little bit better. And maybe I can go and use some of Euler's kind of stuff to take the lag out of this. Chewy's like, goodbye, and I'm like, no, I just got here. Yeah, sorry, we had a bad session today, so we were just kind of talking about what we're going to do the rest of the month. I kind of suspect that we might get some trading next week, but I don't think that I should really trade it. You guys should wait until January and... But I was talking about, I haven't done a whole lot of investigation on daily timeframes. And there's a couple of things that I know that might help based on doing a momentum strategy. So. Well, ZN is about back to where we were when I took that position earlier. Right? Wasn't it at 16? Oh, I can't tell because it was in the micros. It was 393. No. It was 3937. Right here. Oh, that's so crazy. Because man. All right. It's pretty bad. The market definitely defied the market moving news today. Okay, I'm just rambling. Monday.